What's going on, everybody? TG here, back with another video. I want to talk to you guys today about hedging and how you can hedge your portfolios with UVXY, which is the short-term futures ETF. It's a 1.5 leverage exposure to the index, comprising of the first and second month of the VIX futures with a weighted average maturity of 1 month. So essentially, if volatility spikes up and the S&P goes down, this goes up a lot. So essentially what I like to do is I like to buy UVXY calls. So if we look at my portfolio and go here, today when the S&P was down some and the VIX was up, I was able to sell these calls for a nice $168 gain for the day, which is about $147 gain in total because I was down on it yesterday. So that's essentially what I like to do to hedge myself, is by buying these calls. And it's a good way to make money and lock in realized gains when the market goes down. So if we actually look at it, this is what I do. I look on days, usually go out 2 or 3 weeks just so I don't get destroyed if I have 1 or 2 bad days. But then I'll go ahead and buy a call, like a $35 call. So buy the call for 209, and then you have your positions that you can hedge with. So essentially, if you're super bullish on the market, you want to have some of these calls in your portfolio for when the market goes down. You can actually lock in some gains, and that way it limits your exposure and mitigates risk. So it's a really great strategy to do. I've been doing it for a while. These past couple weeks, I've been really practicing better risk management and better hedging, because obviously if you look at my portfolio, it is very, very bullish. I'm super bullish on Apple, AMD, Amazon, and extremely bullish on BABA. So we do stuff like that to hedge ourselves, and be careful, because that's a great way to just get some profits on days when the market's not doing so well. You can make some profit off that. So again, you can go ahead and you can buy calls on that. You can even buy shares if you want, but you don't want to hold these things for a long time. And when I say that is, if you look at the 5-year for it, it's straight down. Better representation is the 1 year. So obviously it was up big, but then it's leveraged. So the downside is leveraged as well. And obviously losses are harder to recoup than gains. So a 50% loss, you would require a 100% gain to get back, if that makes sense. So you don't want to hold these things long term, a week or 2 max, and then get out, because they have the little spikes up when things happen, and then they come back down. So that's how I try to play it off of. Little days like this, I can make nice $100 or something, mitigate some of my risk. And also my credit spreads that I do, I like to do that as well. So on my Amazon, I locked in profits on one today. I'm still up on the other one, this one right here, but I might just try to let this one expire worthless potentially, or if it goes down to like in the 30s, I'll buy it back, because I'm already up over 50% on that. Same thing as Apple. I'm up pretty good on my Apple ones for this week. Where is it? I don't know why they're not showing up on this one, but I do have some other Apple ones that are expiring this week, or next week, next Friday actually. So you try to play it on that. BABA, same thing. I have some expiring next week that I am down on right now, but I'm trying to average down. And if BABA does have a good day tomorrow, we should be good. But essentially, it's at 212. So we're putting $2,000 on the line on this. We've gotten almost $500 in credit. So our max loss is about $1,500. Obviously, we don't want to lose $1,500, but BABA would have to drop under 212.5 for that. And if we look at BABA's chart right now, it is essentially sitting around that 214, 215 range. I hope it can hold 215, because it has just not done well at all. These past couple days, it has these big spike ups and it sells off. So I'm expecting it to pop back up pretty soon. Too much good news has come out about it, but that's essentially how I hedge myself against these things. And it's a great way to do so. So that's what I'm going to continue to do, is by hedging myself using UVXY as a great hedge for that. Again, you don't want to hold this thing quick. I got off at the peak of the day. Let's see, my 35s, the highest of the day was 265. So I did not get 265. I think I got like let me see exactly what I got for that position. 238 I got. So the middle of the day I did pretty well. I did sell one earlier in the beginning of the day at like 2, but essentially just trying to make profit for the day on UVXY, trying to make that $100. That way it softens the blow, and you have crap like this happen where people just short sell the living crap out of Alibaba. So it's a good way to hedge yourself, and it's a good way to lock and realize gains. So you can use UVXY, you can use the VIX. I like the VIX as well. I'm gonna start using that a little bit more to do it, but essentially it's pretty similar. It's the same type of volatility index, and essentially when volatility spikes up, this goes down. So if you actually look at the VIX index, it is up today. It's about 2.5%, but it was up obviously a lot more, about 17.5 at one point. But again, volatility, it likes to basically stay pretty stagnant. So when you have big spike ups, it's good to short it. When you have big downside, it's good to buy calls on it. So it's just a great way to hedge yourself, and to make profits on down days as well. And that way, it's kind of like a barbell type portfolio. When one goes down, you can make a little bit from the other one, and lock in some realized gains. So if UVXY ends up going red again today, I will buy some more, because I am, slightly bearish in the short term, just because there's a lot of uncertainty. So that bodes well when volatility spikes up. But again, we'll have to see. Again, this is just a great way to be safe and use good risk management by hedging yourself. I'm going to have a lot of stuff coming out about that, becoming a smarter trader, because especially when you get your guys' accounts up big, you guys have to start, using good risk management and hedging yourself, and being smart, because if you end up playing it bad, you can blow your account up. And I'm at the point now where I just can't do that. I've taken the risks in the beginning to get here, to get to over 100,000 in my account, but I can't do that stuff anymore. I mean, if we look at my Robinhood account, I was not using risk management in the past couple of years. I've had massive, I had big ups, and then bam, crash down. Big ups, we're up 49,000. Bam, we come down, we're only up 5,000. Got back to being up 47,000. Closed the account out, put it into E-Trade, and now we're up about 10,000 on our E-Trade account as well. So again, playing it smart, playing risk management. We've managed to double our account. Now we're playing it smart, trying to get about 30% a year. Doing some safe strategies like we're doing. So again, this is just risk management. This is proper ways to hedge yourself and be smart. And that's essentially what we're going to be doing. So guys, let me know your thoughts on everything. Hope you guys are having a great day. Hope you guys are doing good. It's a pretty wild day in the market overall. If we actually look at the indexes, they're basically flat. They were down earlier, but they have recovered pretty well since. So started up big, dropped down about 1%. Now it's recovered about 0.4% for the Nasdaq. Dow's down about even. S&P's about even as well. Nasdaq's up a very little bit, but the VIX is also up. So again, just playing the volatility, using volatility to our advantage, and having an contrarian mindset where people sell hard, we buy. People buy up super high, then we sell. So trying to play it safe, trying to play it smart. But anyways, guys, let me know your thoughts on all of this. But again, great ways to hedge yourself, great ways to make some money on the downturns as well. That way the downturns aren't as bad. You get a little bit of money from that, and you can throw it into another position on the downturn. That's exactly what we did today. We took our profits from UVXY, we threw it into a BABA credit spread. So anyways, guys, have a wonderful, wonderful day. Like and subscribe if you guys enjoyed. We have a free Discord link in the description below if you want to ask a little bit more questions, go in a little bit more detail on what I do and how I do it. I'm always here for you guys, so come on in and join, and just send me a message or put it in the group, and I'll respond to you. So have a wonderful day, guys. Like and subscribe. We're going to Missouri, so not gonna be able to make videos, but I'm uploading a couple videos today. So you might hear that in a couple of videos this week. Why you continue to say that? Because I'm going there and I'm not gonna be able to record, so I'm trying to make as much as I can for you guys now, so that way when I'm gone, it's not as bad. But anyways, have a wonderful, wonderful day. Hopefully we can end green, but until then, I'll see you guys next video. Take it easy, guys. Thank you for everything. Bye.